There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Hello everybody, welcome to the weekly update call for Panther. Today we have exciting news because finally we are releasing this weekend, Kevin.
3.0. Yeah,
3.0. We're releasing 3.0. So Kevin prepared like the presentation results. So he will show us everything. I'm really excited because even 2.0 was performing amazing for me. I did like what? I did 20% almost, I think, this month. Like
Crazy.
That's what the MyFX book shows.
Yeah, maybe it's not lying.
Yeah, I think it was 20%, like because my account, it's a smaller account, just like to tell people that it's a smaller account so they know. So the risk, it's a little bit bigger. I'm actually, instead of 1%, I'm risking around 3.5, sometimes even 4% of my account. So me and Kevin were already discussing that this account, we're going to be riding through all the Panther versions. And when it grows like to 2000 and above, we will always leave the settings like super aggressive, 2% per every single trade, so people can see what it can do, what it can storm, all the storms and everything, and what we can get out of it. So you guys don't have to like risk as much. I will risk 2% for every single trade, so you can also have like a super aggressive account, even though we don't recommend more than 1% per trade. Isn't that so, Kevin?
Yeah, don't do that.
Perfect. So Kevin, the floor is yours. Take it away.
Okay, thank you. Welcome everybody. I know you waited for this so long, as have I. Me and Matej worked on this for so many days and so many hours. Still, I'm a little sleepless. So yeah, we are getting there. We are getting 3.0. This is the first half of update. The second half will be probably in the late August. So we're adding more pairs. For now, we didn't do it, but we will go over that. So if you're excited and have any questions, just come to the chat. Ask me. If you're not here and watching the recording, just go to the Panther Traders chat and ask there, so we can answer it next time or even in the chat. But let's get started. So right now, the first important thing is every strategy is tested. Still, we're starting building our strategies from 2010. So our core is 2010 till today's date. So but what we gave priority is that we have a robust strategy. That means that no matter what happens, no 9/11, Russian invasion, ISIS, any more pandemics, anything, strategy needs to make money that year. So our goals are bigger. They're not like month to month, like we talk about, but if you're a Panther user, you already know that. And for us, the most important part is that it makes it through the whole data we have without any problem. As you can see here, we have, I think, great results. Of course, you know, who follow me, that this right now, this percentage will not work out because of so much data. The calculation gets a little messy, but I will help you with that. So the maximum drawdown, that is correct. So meaning that if you would run from 2006 some pairs and some pairs from 2003, you would get maximum 30% drawdown, and that is in 2008, 2009, when the big market reset happened, the great how recession that we had in our time. So let's go on. And this is all the data we have. So as you can see, it pretty much performed flawlessly. You need to understand that these are the years. So these are the years that it's made for. These are just like robust testing years. So it's not optimized for those years. It's just the main reason is that he makes money or that he survives. And when we get from this year to this year, we survive, we make money. Same, I have here a chart, equity chart, and you can see that this was the biggest drawdown. This is like the 30% from equity, but later on, we don't get near that. We get like, from 2020 data, we are like having 6% maximum drawdown on 0.5 risk. So like it's 4% less than we had now. Okay, so on and on I went from, so this is all the backtest, what you can expect at least. So from 10-year, or this is, sorry, 12-year data, you can expect at least 50% per year. So meaning that this was like the average each year made. So like this is like the minimum you could expect from it. Of course, there will be months and years that will perform better. And of course, we will keep upgrading it. So this is just the beginning. Like I said, this calculation right here, you can see my mouse, yeah? Huh? You can see my mouse. Dominic, mute us.
Yeah, we can see it.
Okay, sorry, thanks. Wasn't sure. So this yearly average percent return is having some problems because the data is so big. So the calculation gets a little messy. Same as average daily profit, average monthly profit, the rest like a winning percentage, number of trades, and drawdown stays as it must. So just a little walkthrough. I will more talk about it more in 2020 data. So this is the monthly performance. As you can see, it's pretty much the same as we have up before. Most of the trades now are positive and a lot bigger than we had, like 3%, 2%. On average, we should see around 5% each month now. So that's the main improvement we are proud of. And also, like I said, all the strategies must survive and must work in the worst possible scenario. So yeah, this was our goal. So from 1%, you could expect at least 144%, but the drawdowns are a little messier because you have more trades. So the trades are faster, meaning the shorter, the stop loss is lower, and you have more trades now. So no more waiting 1 or 2 days without trades. Every day right now you will see a trade. So even the newcomers who are very eager to see its first trade will now be satisfied, I guess. So this is like with 1.2% on 1.2% with 2010. And as you can see, with 1.5, you're reaching 30% drawdown. So we reached that before with, I think, like 1.2%, something like that. But this is like 2010 date. So this means this is over exaggerated. And this is like the maximum that can happen if we have like year 2010. So that was the biggest drawdown, meaning year after the recession. 2020. So this would be like, I think the best data I can show you right now. This is like the most real and accurate data we can use. So meaning with the 0.5%, we brought down drawdown from 10% to 6% and average yearly return to 102%. It's a little lower, but the drawdown is 6%, is 4% lower, meaning if you now use 1% risk, you get almost the same drawdown as per 0.5% in the version 2 and more profit. So we are talking like 500%. In the best scenario. In the worst scenario, we get around 127 per year. Sorry, not per month. So yeah, this is the main stuff. So we only gave you 1.5%. So for all of you like Dominic, who are, how to say it, tune it up, you can expect like 1,500% per year with 20%, almost 90% drawdown. or at least on, let's say, minimum 253% per year. So I think that's big improvement since on 2%, I think we had like 30% drawdown on Panther 2.0. So yeah, but this is the first half. Like I said, we will keep improving that. We want to get you until the next year. We want to have a like at least 4.0 with smaller stop losses, bigger take profits, and probably we will implement some strategies with Friday close, because we found some pairs that are difficult to build. So yeah, we'll probably implement the Friday close. So meaning you will have a trades only open for some pairs during the week. And the other stuff is we are currently seeing big correlation between pairs, meaning that we're kind of topping on the pair. So if we add more, like now, we can add more pair and we cannot keep the drawdown down. So every pair we add, it will keep drawdown up and also profit up, but we don't want to get drawdown too much in the sky. So that's why we're keeping it here with 10 pairs. Right now we are running, I think 2.0 had like 8 pairs, I think, because Euro AUD was shut down in the middle of it. And yeah, and Euro JPY was added, Audin as it is added. We had those, this was shut down. He's fixed now. So EuroCat is fixed now. Sometimes we found ourselves that on the different brokers, we had different position. Now we fixed that. Also, GBP Cat had a different position. Now it's fixed. GBP JPY had great winning spree, at least this year. But now we also fixed that it has lower losses, lesser stop losses, and so smaller stop losses, sorry, and trading stop loss. Also, Euro JPY and some pairs doesn't have take profit. So all they're using are trailing stop loss. Okay, so when you see that you have a big move, like let's say, which will come now that the summer is starting, we will probably see moves as like 300, 400 pips. We will capitalize on this because stop loss will follow the profit. Yeah, that's mostly it. So now the questions, I guess. So I can tell you this stop loss was maximum stop loss from GBP JPY 220 pips, but in 2010, because it uses ATR. I don't know if you know what this is. This is average true range to set up stop loss, but this is like the maximum in extreme cases, stuff like that. So it was only that one pair from like 10,000 trades. On average, max stop loss on NZD on NZD JPY 155, meaning that if you run 0.01 on $500, you're risking 3%. Before that, you risk like 4% on some trades, even 6%. So yeah, now if we want to use 0.5% risk, you can run it with $3,000. So we fixed even that. Yeah, that's it. Any questions, comments, observations?
I don't see any questions in the chat, but that looks amazing. Everything that you just showed us, like especially this, that we got a lower risk on the smaller accounts, and that we can like make like a lot like amazing like profits like through the year. So I really love it. I can't wait. So Kevin, when is it coming out? It's coming out this weekend.
Yeah, this weekend we pushed. We already pushed.
What's the best thing that like people like just close out like tomorrow the open trades that they have? So or on Friday before we update.
Yeah, the Friday before the market close, you can close all the trades if you want to close them before. So you like the profit, you know, you can close them before. But definitely you need to close them. You need to close down the charts so we get reset in the data bars, meaning that it will do its thing, and we will update you with the new magic number. So before that we had the same magic number for the same pairs, but now we don't have, because the system changed, so the strategies are more smoother, less errors, stuff like that. So we fixed a lot of those things.
Amazing. So we just closed down all the charts. We closed the MT4,
Yeah.
we reset and reboot the VPS, and then we do everything the same as it was before. And did like some pairs now changed on, are all of them on H1 now, or how is it?
Yeah, sorry, that's great. I forgot. Yeah, every pair now is on H1, meaning that Dominic, you will have to update video in Academy.
Yeah.
And we talk about some settings with the boxes. So when you have live trading, changing signals and something like that, you remember?
Yeah.
Okay, so all of those three must be checked, so you can have the right the panel that is on the Panther then tracks your trades. It only does that. So track your trades and combine them so that you can see which performs the best. Everything is 1 hour, so now you have almost zero to screw. to make
No chance to mess anything up.
not the less and less, I guess. The more I will find out what people want, the more I can take those stuff away. But most important, I think it is that so before that we had some problems with different trades. So like on GBP Cat, I had a sell and you had a buy. Yeah.
Okay.
Now this shouldn't happen anymore because we went over big sample of data and big sample of brokers. So we pretty much 99% fix that. There is some question from Simon, which broker is the best? No, which variants of the broker is the best for Panther? The best would be for you to use ECN or what you call pro account or what you call raw account. So before that, we told you, so in Panther 1.0 or 2.0, we were talking that no matter how much spread you have, it will not affect your trading. Well, now it will, because it has lower stop loss, bigger take profits, and in the end it will. So it's better for you to get better positions and fixed fixed spreads. So anything that gives you like ACN, stuff like that, will do fine. Then I have another, which means pro. Yeah, probably depends on your broker. Some brokers have pro, some brokers have like raw from Auvoria, some brokers have .com, depending on your broker totally. So if you need to know, you need to have like tight spread, or it's called ACN or raw, something like that. So then Ryan asked, does it matter what broker for signals? You probably mean if it will perform on different brokers differently. Yes, it may happen, but it's very unlikely. So we try to fix that. Maybe 1% of the trades will still happen, but you cannot change anything. We tested on A brokers. We tested on the brokers with leverage to 1 to 30, 1 to 100, 1 to 500. You can run it on 1 to 30. Even works on 1 to 10 if you use 0.5% risk. And I think that's pretty much it. So I gave you a lot of info. I'm glad I pressed record before we started. But yeah, that's pretty much it. So it should be better. You should be faster trades, more trades, but I think it's important, more robust. So meaning that right now, this will probably come very much in handy because of the war with Ukraine, recession starting, showing its teeth, politician problem, stuff like that. So yeah, I think this will be great save. Also, again, I saw some, don't forget the disclaimer. Thank you, Ryan. So yeah, this is all disclaimer. This is, I can tell you the best performance doesn't, how do you say it? The past performance doesn't guarantee future results, but I think it will do just fine. So Simon asked, minimum requirement balance for 0.5 risk is $3,000, all $3,000 or 3,000 euros. Yes. You can choose if you want. You can use bigger risk, but it's not scalable. So let's say if the smallest lot in Forex is 0.01, meaning that on 500 if you use so calculation with this, means you're risking at least 15 euros. Yeah. So on $500, that's like 3.1% risk. Okay, so that's the main stuff, because we cannot change the minimum lot size on Forex. Also, I saw that this week wasn't performing great. I totally get that. I mean, it was the hard week for me to trade, so I know that Panther must have the same problems or even worse one. But this is what happens. So we have like 10 weeks which are performing beautifully. We're like, everybody's happy, everybody's sleeping, everybody's celebrating, and then one week comes and we get some people crying. That's okay, I totally get it, but you need to understand that Panther is not here to make you millionaire over 1 year or over 2 years, but probably over 6 to 7 years. So depending on your balance, depending on your risk settings and stuff like that, just whatever you do, I would advise, don't increase your risk. When you set the risk, leave it there, because what some people I saw that does is they take risk like 0.7 on 1% per trade, and they enter in a bad week and losing like 2% of their balance, and then they lower the risk. Look, if you're in for a ride, if you want a bigger, I know I have a guy which will use 2% risk anyway, whatever I tell him. So, but he's like, okay with the drawdowns, with everything. So, you know, I think it's important that you keep it what you choose, because if you choose 0.7%, 1%, even 2%, please God, don't do it. But even if you choose that, just stick with it. The other message I have for everybody here on the call and everybody looking, me and Dominic have one VPS that is free, so we have like 3 instances. Some people were like, they want to get into the beta test room, and if you're one of them, we have like 3 instances. We can work something out, like organizing and do like meetings once per 3 months or once per 2 months, whatever you want. And we can let you test it if you want. How much you want, just let me know in the chat. I want to be a beta tester, and I will contact you, make another group, and let's go on with that. How many trades can Panther lose? Means percent per week. Is there? No, I have only so if we look at the equity curve, this is it. Yeah, so equity curve from 2010, that would mean that maximum was 10%, but 10% in a sense that from the highest peak to the lowest peak was like 10%, then it went up. So no weekly drawdown, only monthly drawdown. And I would say that the best thing to say right now is, if I was in the mirror, I would say, keep that in mind. The drawdown can happen over the year, so we can get in a month or 2 like this one. So you can see that at the start of the June, I don't know if you see these numbers, but in the start of the June, it started to fail, so making minus, made 10% minus. And then at the beginning of July, it started to get back on. And it will be like that all the time. As you can see, it's not straight right. It's like go down, up, down, up, down, up. And if you choose Panther, you need to also buy yourself some back of patience, because it's needed. It's not here, like I said, to make you 1000% per year. It can, but you need to pay the price of the drawdown. Okay. So that's why I recommend 0.5%, let's say 0.7% is okay, or 1% if you want, but you need to be able to accept like 12, 13% risk. Okay. Meaning from your money, from your balance, not only open, but from your balance lost. And then from this point on, you go on. So here you would close, like, if you go more specifically, I will just use this as an example. I hope I can. Yeah. So here you would lose like 10% from your balance. And if you quitted Panther, you never got it back. But if you stayed for 1 more month, you gained. If you remember, we had like Panther on, a second, I will show you. 681. So yeah, if you remember this chart, always try to remember this chart, because this chart is like the perfect. So this was our first version, yeah, the first or very best. So, and this was our start. So we started with Panther in AP around here, I think, and we had like the losing month. Okay, and then we applied 2.0, which was of course was better, but still the principle stays the same. And now we are back in the higher high. So then it was like 20%. Now the high was 20%, and we are still 1K profit, even though we had bad week. So this product is for those who wants to sleep well and stick with it, because if you're gonna change it, you will not get results. Like this is with everything, with trades, the diet, whatever. You can do whatever you want. If you're not sticking with it, you're not following it, you're not pushing through, you're not gonna succeed. And I will try to deliver better and better and better Panther, but it takes time. It takes time to test it. It takes time to live test it. It takes time to check the code, to upgrade the code, and that's why I need you to be patient. If I could, I will make you the best Panther I could, but every time I make a new version, I learn something, so I can use that, and so on, so on, so on. Also, we will try to apply only 24. So for all the MIV user, manual approved traders from USA, we will apply once per day confirmation. So no more every trade, no more like Ryan auto clickers and stuff like that. Okay, just one click per trade, 1 click per day. We'll try to apply that, and that's it. Okay, any more questions by Ryan or Simon? I'm thankful that you're active with me here. No, thanks. Okay. Okay, so if nothing else, thank you very much for coming. If you have anything else, type me in the chat. I'm trying to be as active as I can. That's it, Dominic.
I just think that like Panther getting better and better is gonna be more and more popular in the AP, especially with the low drawdown, like no management, like like no management whatsoever. So I'm like really excited about it, especially now that I see how 2.0 was working. So I think that 3.0 is gonna be like even more amazing. Definitely in my FX book, I will write down the date when we started 3.0, so we know exactly like how to follow it and also measure the performance of my account. And I think that we can get it like to at least €1,000 like this till the end of the year. What do you think?
Yeah,
500 to 1,000.
They should work with your risk. I think we can go 1.5, 1.5K.
Okay,
Because
let's see.
Let's 4% risk, so
Yeah, it's gonna be definitely nice. So guys, so that we're not gonna be too long, thank you for joining, and talk to you soon.
There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.